Good morning, trading world. It is FOMC day. Today is May 3rd, 2023, 8:12 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook: the FOMC is here. We should see the tale of two completely different days all in one day. With the FOMC announcement today, we can effectively divide the day into two trading days: before the FOMC and after the FOMC. The two trading days could not be more different. The first part of the day has two data drops, with the most important at 8:15 a.m. being the ADP Employment report. With more and more layoffs, could a higher unemployment rate be good news now? Who knows? At this point, all I can do is react to how the market takes the report. What I am looking to happen today is to get a Fed drift before the announcement, and in my opinion, it could be lower first, then a pop to the upside after a radical whipsaw on the announcement, then a push up on the actual conference. This could happen the exact opposite, but I am willing to risk some bearish positions before the announcement, along with some of my longer dated bearish positions, because I have a longer term bearish expectation. However, my bearish longer-term expectation didn't stop me from buying some 418 calls when we hit the bottom edge of the market maker's expected move yesterday. Those calls were dated 6 days out. So, as you can tell from the position, I'm looking for a pop back up to that 418 area, somewhere in between those 6 days. I may even put on more today if things go the way that I'm thinking. If we get a continued push back down and retest that market makers the lower end of that market makers expected move before the FOMC announcement. So, as of right now, things are kind of holding. We have a wall of worry built at the 412. And at the close of yesterday, I came back in, even after having a good day. When I have really good days, my activity after that and that day after is usually small to non-existent. But with today being the FOMC day, I came back in before the close of yesterday and shorted the 412 again in a few different accounts, a few different ways. So I was looking for this drift to be to the downside first before the FOMC announcement, just to tell you how my posture is for today. Today is a day you must definitely understand your risk right now, so as not to overstep it. Again, yesterday I had a really good day, and usually I slow down and don't do much on the following day, but since today is FOMC day, I was a lot more active in setting up trades at the end of a really good day, much more than normal. And if that 413 pops, or we break that resistance pre-market, I have no problem with just going back and covering that 412, those 412 puts at a loss. I'm not going to sit on it. I'm not going to play with it. It's just a risk I was willing to take after yesterday's game and with ahead of the FOMC announcement. So with all that being said, let's get to the key levels of the day. All right, here we are with the key levels of the day. Starting on the resistance side, we have our Jack resistance at the 411, 412 area. There is no doubt that this area holds a lot of weight today. I saw it yesterday, and when we reached it at the end of yesterday, I stepped back in outside of my normal self to short this level again. So I'm looking at this holding a lot of weight and possibly seeing some rejection off of it the first part of the day. Then we have our queen resistance area, which is going to be the 415 to 416 area, because if we pop the Jack resistance area 411 to 412, we have a lot of space to roam and run up to this 415 to 416 area. Then we have our king resistance area 417 to 418. It's a good ways up, but it is possible today. On the support side, we have our Jack support at the 410 to 409 area, which is going to be key today as well, because this is right around the area of our weekly market makers expected move. What is it? It's actually the 408 area. So somewhere in between these two places is our weekly market makers expected move, which we can come for and retest again. So that's our Jack support area 410 to the 409 area. Then we have our queen support area 408 to the 407 area. This is the target for me today. I don't talk about this much, but we do have what's called a failed trend day, and what happens on a failed trend day is we hit the target and there's nothing else to do once we hit the target but reverse, turn around, because everyone has it as a target, and we start covering and we immediately start moving the opposite direction after hitting the target. So I have a target down around this 408 area. Then we have our king support area, which is going to be the 406 to the 404 area. So it would not surprise me as we drift down pre-Fed announcement all the way down here and even overrun it a bit somewhere in between here, hitting the target and then reversing after hitting that target, or coming down close, and then on the announcement we get that whipsaw that takes us down to touch these areas and pop back up and kind of a retest before taking off in the other direction. Now that we've covered the levels of the day, the main thesis for today is bullish, closing above the 1484 with a projected target high of between 411 and 416. The alternate thesis is bearish, closing below 1484 with a projected target low of between 410 and 404. Best believe if we get this alternate thesis, it will be very explosive. and the main channel we're in is between 397 all the way up to 416. It wouldn't surprise me that at some point this week we test the extremes, and those are the extremes of the main channel we are in. So it wouldn't surprise me at all if we test either the 397 or the 416. Yesterday, market strength and breadth of open gap down, falling from the sky and continuing until price hit the weekly market makers expected move, and then bouncing from there. So today I expect strength to open stronger, then drift lower, kind of falling again, maybe falling from the sky in a maybe slower, controlled type descent. And we'll drift until somewhere around the FOMC announcement, and at that point in time we'll probably notice a divergence as prices continuing to drift one way but strength starts to pick up another way. Today's another one of those days where you can't trust your intraday indicators because of the gap in order flow. So I talked about these irrational days, and they always seem to happen when we have these gaps in order flow where your intraday indicators can definitely throw you off going one way when price action clearly pushes another way. So we have to be careful of that, but also understand that the chart in control today, let me bring that back up. The chart in control today is the monthly time frame, followed closely, and it may get overtaken by the time we get to the open. It's followed by the 30-minute time frame. So a lot's riding on this 30-minute time frame today. So if I'm going to pay attention to anything intraday, it's more than likely the 30-minute, but I don't want to put too much trust in it because of the gap in order flow and knowing how it impacts and gives us these irrational days where it pretty much ignores intraday time frames. We do have harmony between the technical side, which is bullish, and the quant side, which is also bullish. The futures have a bullish bias for the day as well, with harmony between the technical side and the technical side being bullish and the quant side also being bullish. This is what kind of gives me a little more confidence that if we hit the lower edge of this market maker's expected move or below, is why I will really look into putting on some more calls for that 416, 418 area. I'm looking for us to hit it sometime between now and the end of the week, but I would give myself more time. Probably going into next week. Now, today is unclear due to the data drops before the FOMC and the FOMC itself. So we have to be on alert for every scenario. And the probabilities for scenarios are really jumbled today. So we came in, you have to be on alert for every scenario today. So let's bring up those scenarios. All right, here we have our first scenario. The probabilities are pretty much even across the board, so please be aware and expecting anything and everything this morning. But the first scenario that I'm going to be preparing for is going to be our trend day down, meaning we open gap down and start with a pushback toward the previous close, represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day, or in today's case, our Fed drift. We can continue down, and we usually find our midday chop around either the possible queen or king support area. Today is going to be a little different, with us kind of coming into like a weight stance where everything just kind of stands still, and we're probably going to drift sideways up into the actual FOMC announcement. Once we get the announcement, I expect a pretty extreme whipsaw to take place where we probably hit further down, then up, and whipsawing us back to even before we actually start the actual trend that's going to take place for the rest of the day. So this is not your normal trend day. What we have here is pretty much what I consider a failed trend day, where we reach a target, and after we reach that target, we get some immediate reversal off of that target. So in fact, what I'm looking for to happen today is a failed trend day. All right, our next scenario is going to be our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area. Find our midday chop around either the queen or king resistance before leveling out and waiting on the FOMC announcement. Once we get the FOMC announcement, we're going to get an extreme whipsaw up, then down, level out, and then start the trend that we're going to see for the rest of the day. So this is not the normal rounded reversal day type structure because this is an FOMC announcement. Also, because of the FOMC announcement, the vice versa alert is going to be different as well, and we do have a vice versa alert on the rounded reversal today as well, and it's going to look something like this, where we get this continued push lower through the cash open, and we're going to hit our midday chop around either the possible queen, maybe even, I doubt we get that far, but we're aiming somewhere around the queen support area before we get that midday chop that takes us into the FOMC announcement, which may be a little longer than usual. And we're going to get the whipsaw on the actual FOMC announcement, which could take us even further down, and then that whipsaw back up, level out, and then we get the real trend for the rest of the day, which could possibly be up on our vice versa alert. So this is our rounded reversal day type structure and the vice versa alert for that scenario. All right, our last scenario is going to be, and I should have taken the expanded part off, but it's going to be our range day structure. We're going to go back and forth in a decent to small range compared to what we've been in the last few days, but we're going to go back and forth in this range up until maybe an hour before the FOMC announcement, where we're probably going to just flatline at that point. And then going into the FOMC announcement, we're waking up out of that flat line with the FOMC announcement and its whipsaw that comes with the announcement, where we take that whipsaw down, then up, level out, and then we get the trend that we're going to try to pursue for the rest of the day and possibly for the rest of the week. So those are the scenarios that I'm going to be preparing for. Something that I didn't mention that I looked at earlier today, I think yesterday, just off the top of my head, I think yesterday when I looked at the Fed Watch tool, we were at like a 94%, was it 94% probability of hiking 25 basis points. Today, it's at 85.4%, the probability of hiking 24 basis points. And whatever this says, like no matter what the chart says, the way the market has been acting the last few weeks, you can even throw in a month, we have not really officially priced in all of these rate hikes. Regardless of what the Fed Watch tool says or what people on CNBC, the talking heads, say, these rate hikes are not priced in yet. So I'm looking forward to a very volatile summer, because there's going to be a lot of things that are going to hit the tape, and especially with people thinking that the banking crisis is over with or the regional banking crisis are done with. They're still hunting small regional banks, and I don't think it's over with yet. And there's probably going to be another failure out there that's going to push us into even a more volatile state. So that's another thing to be looking for and prepared for, and to keep on your mind. I hope this helps. As always, your most important job is to protect the capital that you already have. We do this by knowing and understanding the risk that you have on in each position that you take, and also understanding the risk of current market conditions. Right now is a very volatile time, so you need to understand that and apply that into your positioning. When we're in volatile times, most of the time you can cut position size, because with things being so volatile, it only takes half the position to achieve twice the profitability, or losses in some cases. So you need to be aware of that and adjust accordingly. So again, I hope this helps. Wishing you a positive trading day. Let's get out and make it a great one.